Welcome to the Times of Industry show. I'm very excited to have Bob Hoye on the phone today with us. And Bob is the founder, and he also writes for chartsandmarkets.com and for pivataladvice.com. The reason I want to have Bob on is because we want to get his take on what's happening right now with elections, gold, and with investing in general after the September correction. Bob, thank you for joining us.
Oh, good to be with you, Larry. The perspective we go at is through the historical analysis, and any of these great big financial bubbles like we are on now, they've happened before. The very first one was invented in 1720 with the South Sea bubble, and they've had certain characteristics. 1929 was number 5. And the one we're on now, it has all the makings of a classic, great financial bubble. And the characteristics of it is you'll get a rally in residential real estate. And during the bubble, gold's real price goes down. Real price is where you take it and divide it by the CPI, always in the senior currency. And with that, with the boom, real prices for industrial commodities such as base metals and crude oil go up. And then as part of the end of the great bubble, the real price of gold turns up, which it has done. And this typically starts a very long bull market for the gold sector. And then also going the other way, the real price of base metals and crude oil energy costs head down. And this, of course, then makes gold the ideal investment in the post-bubble world. So I should probably describe a little more of the post-bubble world. It's serious deflation. But during this, as I said, if you're monitoring gold's real price, with the gold's real price going up in a post-bubble world, that improves profit margins in the industry. And we have seen this because you've seen a huge drop in the price of crude oil, and that represents energy costs, because no matter where you're mining, you're going to be buying some crude oil. Or it relates to power, and then also it relates to the cost of blasting agents and all that sort of stuff. So 30% of gold mining costs are essentially power related, 30% related to blasting agents and things like that, and the rest is labor. So this is where the gold mining industry has done very well in post-bubble deflation. So gold has already moved very quickly or very nicely on a strong, and we take it to be multi-year bull market. And it has also been, the way it's been working with it until the last couple of months, with a steady US dollar, and indeed at times the US dollar outperforming all other currencies. So in many other currencies, of course, the move for gold has been terrific. And it's also been an outstanding bull market for gold in nominal terms up to, say, damn near 2000. So we see the bull market in gold as moving for the right reasons. Underneath it, profit margins are improving tremendously. Now, this will also cover the whole gold sector from the big majors, the big producers, which, as I said, a rising real price improves their profit margins of all gold miners. So the bull market will encompass, and it has been, everything from the biggies to the junior exploration stocks. And the exploration side, while they may not be operating, the improvement in real price also suggests an improvement for potential operations for a new gold prospect. So we figured that the bull market would be cover everything from majors right down to speculative juniors. And we had a terrific move early in the year. That was fabulous. There was some of the Vancouver stocks here, like Teuton Gold, did a really fast move from 80 cents to I think 4.25. It was pretty fast, and there were other representatives as well. So but the sector became overbought with some sectors and senior stock indexes becoming overbought. So that just introduces to your viewers the way that gold has worked on the longer term. And when I say a long bull market has started, typically post-bubble contractions have been in the order of about 20 years. And then within that, you still have the 4 or 5 year business cycle where there will be times like recent until, well, this year is a weird year with the COVID flu, but there are times when the play will be for the big stock market and gold shares won't be doing so well. And then there'll be other times when the big stock market is not doing so well, but gold shares will be doing well. And we've noted that since the senior gold stock index, the recognizable gold stock index has bottomed in 2018, they have outperformed the S&P quite nicely. And this is on schedule. So the other thing is that the dislocations in the financial markets, in the economies, should be reviewed, and that is based on this Wuhan flu, where authoritarian governments in far too many countries moved to shut down the economy just like that. And I know that this has never happened before. Not even in war have they shut down an economy. So, as a matter of fact, a major war usually stimulates productions because you're having to make a whole lot of armaments. But this one, the only example is when in London in 1665, it was a major trading and financial center, and it got hit by the Black Death, the really nasty one, the bubonic plague. And about 20% of the population died. And this is not one of these rigged numbers like where they say, where they think, say, maybe 20% of those who were afflicted by the disease died. No, that was a massive depopulation. And of course, trade and commerce in London came to a halt, but it wasn't done by government instruction. So this is the only one that I know of whereby governments knew, in order to extend their authority, shut down every economy. But it was preceded, Laura, by that in summer 2019, the US yield curve inverted. And by that, we mean the curve is the difference between short rates and long rates. And long rates got higher than, short rates got higher than long rates. And when that happens, it's a sign of intense speculation, a great demand for short-term money by, leveraged traders. And I've got the yield curve on charts in the US right back to 1857. And there are many bull and bear markets in that period and many recessions. And the rule is that if the US yield curve inverts, it's going to be followed by a recession. And the recession started officially in February. Now, it's also tied to the Wuhan flu, which is an extraordinary event in having not the illness, but in having so many different countries, governments using it as an excuse to extend control. It's right, a bunch of control freaks. So but seeing through this has been our work on the senior stock indexes. And wherever the US market goes, it'll have an effect on other exchanges. And through the summer here, we've been getting technical excesses. So our approach covers the history of all financial bubbles. And we note that within each financial bubble, as it concludes, there are tremendous similarities on each one, and all were followed by a serious credit contraction. So what we have here is the senior stock indexes in New York becoming very overbought. And one of our technical tools we use, it gives what we call upside exhaustions as a move to the upside completes. And we had plenty of those in the summer, and you've had a sharp correction and like a broader index such as New York Stock Exchange composite indexes on its rebound here lately has not made new highs. The new highs, of course, are being made by the fabulous five, whatever you want to call them, the FANG stocks, and they one by one have been hit. So we're also in a period of time when, if there's going to be a credit crisis discovered, it's likely to be discovered in October or November. So this is a probability. With the highly inflated financial markets going into the season when you can have a correction makes me a little concerned. So our advice through the summer has been to build some liquidity on the technical excesses as they were occurring, and just stand aside and wait for the next buying opportunity. So the advice has been to sell the rallies in the orthodox world of stock equities. And whereas on the other hand, the advice on the gold sector has been to buy the dips, to take advantage of those, and to be overweighted in the gold sector. Also, we get questions from people, and they say, well, where is the ideal place to be if there is a financial storm coming? And your basic gold bug, of course, is always working on the basis of price inflation, CPI inflation, and you've got to own gold on that. And some of the more aggressive gold bugs are calling for now for $15,000 gold, which would be very interesting. But our methodical way of going about it is that with the real price moving up, without that sort of drama in the dollar price, the rise in profitability would be the equivalent of, say, some huge number on gold. But more recently here, after this correction is over, our technical work is calling for the next rally could take it towards 3,000. But to go beyond 3,000 is, I think, guesswork. And then the next stage of that is which part of the gold market do you want to be in? With the bigger companies, you got greater liquidity. If you're into small junior exploration stocks, where I've had considerable experience, sometimes the lack of liquidity can be painful. But if you're in a good deal and it starts to work out, you can do very well, because in the 1930s was the last post-bubble deflation, and the gold stocks did exceptionally well, right down to junior exploration companies. So we have the ability to identify where are the trading opportunities, either on lightening up or going back and buying the dips. And so we're doing well there. So now, and getting back to the bigger picture, the political issue facing America now, and by implication to the rest of the world, is extremely serious. And I've been watching the political action for a long time, and through personal experience, and then also through reading financial history, because if you want to, if when you read financial history, you're also getting political events as well. So in the past, there's been three great experiments in authoritarian government. Third century, when Rome was the power and became corrupted and bureaucratically abused, and it crashed. And then the next one was began in about 1500 and ran into the early 1600s, when in Europe a great reformation was conducted against an almost overwhelming combination of church and state. So, and then you went into a long period of where the individual, freedom of the individual became more important, and the devolution of power from centralized authority. In Europe, they've called it the Protestant Reformation, but that just dealt with the theology side. But every authoritarian institution, and it worked best in England, was examined for utility, and if they thought it was too authoritarian, it began to be put into the background. So the early 1600s is similar to recently here, where you had a renaissance brought about in life by an increasingly prosperous middle class that was independent of a centralized government. So, and I've called it the Great Reformation. So here we are now. The experiment in authoritarian governments began around 1900. And if one had been fully familiar with the two previous experiments in authoritarian government, well, I'll put an aside in here, that the part that goes with it is that the bureaucracy will tax to the limit, and then eventually the public will say no to tax rates. And so the ambition doesn't limit, and it goes to depreciating the currency. So each of those periods, 3rd century, 16th century, and current, well, the feature has been chronic price depreciation, and chronic inflation has been used. Chronic currency depreciation and price inflation has been used to fund the state. So looking at the US, the Federal Reserve has been changed from the idea of managing the economy, which has been ridiculous, to funding, providing unlimited funding to another experiment in unlimited government. And each of those ones in the past ended when the economy was destroyed enough that ordinary folk realized it was too much, that, and the term I've used, Lior, is that it was too much in your face and in your wallet government, and the public reacts with an uprising.
Yeah.
And so this then is building towards the election in the US this fall.
Yeah.
November the 3rd, we are in the fall. I have a guess, and actually in 2016 on July 4th, the American holiday, I published a piece that concluded that Trump and the popular uprising would win the election. And I think there is some probability that this could happen now. But the main risk is that the Democrats have become so ambitious that they would trash a constitutional republic in order to control things. So there could be another rise in the popular uprising that would bring Trump in with a narrow margin. But the problem with the political process in the US is that their actual balloting is subject to corruption. And we do know that the Democrats are very skilled at corrupting the voting system. So one side of me says that Trump can win on a popular uprising making itself felt. And the other side says that maybe the Democrats can rig enough votes to corrupt the election, in which case you've got the end of a Republican, end of a Republican constitutional government. So,
Bob, with everything that you're saying, which is amazing, where can people check out more of everything that you're talking about with your websites?
yeah, the one way to do it is just Bob Hoye, BOBHOYE.com, or just Google Bob Hoye, and it brings in lots of essays and stuff. And we have the two sites, Charts and Markets, which is the technical side, and then my side, either under Bob Hoye, is a number of essays explaining this thing. I used to be on the popular in a public speaking circuit.
Sure.
And essentially these ideas I've expressed in New York, Toronto, London, Zurich, Geneva, Singapore, Hong Kong, Tokyo, but I don't travel so much anymore. But so this research I've done is building and building, and it makes me one of the few optimists out there, because I think that the public, ordinary public, is figuring it out and will advance themselves over the experts in government. And the last successful popular uprising was in late 1989 in Eastern Europe, where ordinary people, unarmed, took on the communist governments that were armed. And in three previous examples, a popular uprising behind the Iron Curtain, Hungary 1956, there was actually East Germany 1953, and then there was the Prague Spring in 1968. All of those were put down by Soviet units with tanks and machine guns, and it was murderous. But in 1989, an unarmed, ordinary folk took on an armed and murderous police state and put it down. So the guys on top lost the will to impose authority. People who had been complacent said, oh, we can change it. So this is possible in Europe against the European communists. I know they're all a bunch of communists. In England, which has gone crazy politics too, in Canada and in the United States, whether the U.S. the uprising is successful on November the 3rd, it's still in the air. But my optimistic side is very hopeful that enough of the ordinary folk get out there and to bring, well, it was used to be called government by the people, of the people, and it has become government by the bureaucrats for the bureaucrats. So
yeah, no, great stuff,
very
Bob.
exciting times.
Yeah, very exciting, and it was an amazing listening to all the wealth of information that you have and the financial history that you brought to the table. And we'll definitely follow up with you in a couple of months to see how everything is developing. Chartsandmarkets.com and pivataladvice.com. Make sure to check it out. Thank you,
We would
Bob.
welcome your interest. Indeed, Lyra.
Thank you very much.
I hope I didn't run on too long.